So here I got the 5-day chart, 5-minute candles for PSTV plus therapeutics. We see two big spikes that quickly sold off. We're going to go over the catalysts, the fundamentals, some of those last 10K, some of the warrants and dilution, and some of their long-term history real quick. So let's go to the 5-year chart to first see. We see $600, $550 prices, so we could assume it's probably reverse split adjusted. And let's check real quick. So I use splithistory.com. So definitely, 2019, August 6th, they did a 1 for 50. That's a big reverse split. So when we're looking at these charts long term, it was never really that price. You can't get FOMO thinking it will ever go back there. A lot of new traders will do that. And then it's also worth noting, let's look at the 3-year daily candle chart. And we see, so many stocks rallied huge off their March lows on 2020. This stock really didn't. The market rallied so hard, this barely had a slight uptrend. And then was already back headed in early 2021, already going pretty much flat. So it's kind of it's not very bullish. When all the other stocks in the market was running, this stock barely ran. And every time it did and volume came in, you could see it was a 1-day situation that quickly sold off. So it's worth noting when that's the situation. And the most volume that came in 3 years was this day, 133 million shares. We tested this 200 SMA and failed. And here we are in a very similar situation, trading around 90 million shares. So didn't run that much with the market the last 2 years. Has a history of 1-day pops. That's not too bullish in my opinion. You got to lock profits on a stock like this, especially when we go back to this 5-day chart and you see how it's sold off. So from low 50 cents range all the way to above $1 to sell all the way back and flush to 50 cents to spike to above 160 and sell back off to around 75 cents, 80 cents while I record this in after hours. So let's go over with the catalyst that caused this first spike. They actually came out with positive data on one of their cancer products, but it's very early phase, so it's only the 1.5A. So many, many years out. But as we've seen in the past, like stocks like Sava and CRIS, CRIS, all it takes is an early stage positive data release on some of these cancer fields, and these stocks will run if they have low enough float. And so they also came out that same day and they announced that they've approved a share repurchase program with the authorization to repurchase up to 2 million of the company's outstanding common stock, which is kind of counterintuitive because their cash is coming from equity dilution. So they're diluting their shares to get cash to buy them back. It seems like they're propping their price, and we're going to go over why I think they're doing that. And so the stock sold all the way back, flushed to the 50 cents range. It first caught my attention because I tried to play a bounce off this 200 SMA. Usually after a big sell-off, there'll be a bounce off this 200 SMA. Whether or not how high it is, you can usually scalp it for at least 5, 10, 15% easily. But this, nothing. It was just consistent selling all the way in after hours into the close of intraday and after hours into the after hour close. Flushed to 50, and then check this out. This next catalyst took us to 160, and this catalyst being that they got awarded $17.6 million from the state of Texas for their cancer product. So that's big in this grand scheme of things, of how big their market cap is and for their cash levels. And so you could also say maybe they're buying shares back now with that money they just got awarded. It's Twitter. Let's see. So let's go over next we'll go over I got on the one here, the resistance levels. But let's first go over some of this 10K. I was digging through their 10K. So let's first take a big picture look at their fundamentals. They actually did have revenue in 2019. 2020 came down to 303,000 of the whole year. 2021, nothing. And nothing again. So they have no revenue. And they're losing lots of money. See net income. They're losing lots of money every year. I'm not used to using the Yahoo annual reports like that. I use the 10Ks like this. So as of July 14th, 2022, they have 22.5 million shares, right? They currently, as of June 30th, had $18 million in cash and the cash equivalents. So that's less than $1 of cash and cash equivalents per share. But when we're talking cash per share on a stock that's constantly losing money, it's not as important, because we see they lost for the first 3 months $5 million, $5.1 million. So they're pretty much losing. They have three quarters left of cash for how much they're losing right now. But then you got to give them credit for that 17 they just got. But it shows a big picture of the kind of the fundamentals in the situation they're in. You go to the recent 10K and you go to page 8 and you go down here to liquidity. The company has incurred a net loss of $9.4 million for the 6 months ended of June 30th, 2022. So if they got $18 million before that award, that's literally just about 1 year of exact cash at their cash burn. The company has an accumulated deficit of $456.3 million as of June 30th. So in total, they've lost $456 million. They're pushing $500 million of loss so far, and bringing these products up that they're still in clinical trials. So additionally, the company used a net cash of $6.5 million to fund its operating activities for the $6 million. So how could they have spent 9.4 and only spent 6.5? And we'll go into that now. Let's see, page 13. And here we go. On 19, let's see. As of June 30th, 2022, there are 2.14 outstanding Series U warrants, which can be exercised into an aggregate of 2.1, the same amount of common stock. So they have outstanding warrants that they've been issued warrants that the infamous H.C. Wainwright. And they also have, you got to dig into this. They have a situation where they offered a company, Lincoln Park, the ability to buy $25 million of their shares. But it's not like a commitment. It's some weird offering where it's not a commitment, but they have to do it when when they want to sell it to them. They have to buy them, and there's no price on it. So it's like this. It's almost like a at the market offering with no commitment. It doesn't have to go through, but it can go through. So there's this constant dilution going on this stock. And you can read about it on page 13 and 14 on their latest 10K. On January 14th, they entered an equity distribution agreement. So they did do an at the market on January 14th, 2022. And it was up to $5 million of shares, and they've currently done 0.9 million. So there's still 4.1 million shares of dilution. So all these pops, there's dilution going on to them. So that's what's going to prevent this from holding up. But at the same time, if volume comes through like 90 million shares, and there's only around, there's 22.5, we'll say around 23, 24, 25 now. That's still a pretty low float. So let's go over the resistance. First one, 85, in which we see from the bottom of these candles, and as well as the bottom of these candles. Next one being the support that we see from these this candle, these candles, and these wicks. So I got 86, 85, 86, close enough. 95, the obvious $1 psychological one, but then 105. 105 is heavy from being resistance on these candles, as well as support here. Then above 105, I see 113. It's the bottom of all these candles, as well as the top of some of this wick action. 113, 115, that's all going to be kind of heavy. And then the obvious 125 is going to be psychological. But 120 as well is going to be, I think, heavy from this bottom of this candle, the top of this candle, and this doji right here. RSI is high right now at 78 when we look at it in the 1 year chart. And then let's look at the 200-day chart, the 200-day candle, or let's see. We'll just put them up. So underneath our current level of 75, underneath we'll go 75 was the first level. 67, 60, 55, and 50. I'm already out, but I lost the thing. So I have to redraw them real quick. 75, 67, 60, 55, and then 50. So this one's obvious. It's the bottom of this candle, top of this candle, and the top of these three, nearly top of this candle, and these wicks, top of this candle. So that's 75. Underneath that, 67. Which is going to be the support of all this action, as well as the resistance on these two first days, as well as the bottom of this wick. So 67. Under 67, I'm going to 60. Which is the top of this candle, top of a couple wicks, nearly this wick, as well as this candle, top of this body of this candle. So 75, 67, 60. Under 60, we got 55. 55, 56. It's the top of a lot of these things. It was a resistance all these days, as well as these days. Under this 55 level, we got the psychological and price action support level of 50 cents. You can see the bottom of all these four candles, this candle, these wicks, and then we'll support again for many, many days over here. So under 50, and under 50 it's 45. I'm going to say 45 because it's the bottom of this candle and this wick and nearly this wick. So under 50, 45, but let's just stick with that for now. So under 75, 67, 60, 55, and 50. And then when we go back on the upside, the nearest resistance levels will be above 75, it goes 86, 95, 105, 113, and 120. And I think it was worth noting when we go to the 3-year chart, we can see the bottom of this candle right here is that 95 cents level. So this was support way back in the day in March. Now it will be resistance when we look to the 14. See, now we put that same see, there's 95 cents. So you can see it failed it pretty much here. We got over here, and now we might find that's 95 cents, which was the March 2020 lows, as the ultimate resistance we can't get over. So long term, this is a good scalper at this price and this volatility. You just lock them in. The gains when you got them, because this stock can kill you otherwise. That's it.